In the vast, interconnected world of global commerce, some giants cast long shadows. They move mountains of resources, divert rivers of capital, and influence the fates of nations, all while remaining almost entirely invisible to the public eye. Trafigura is one such giant. The gasoline in your car, the copper in your smartphone, the aluminum in the plane overhead, all may have passed through the hands of this discrete, immensely powerful entity. Imagine the global economy as a living organism. Its lifeblood isn't just money, but the physical stuff that builds our world, the oil that fuels our transport, the metals that form our cities, the grain that feeds our populations. Commodity trading is the vast, intricate circulatory system that pumps this lifeblood across the planet. It's a relentless flow of raw materials from points of surplus to points of need, a complex dance of logistics, finance, and risk that underpins modern civilization itself. Every product you touch, every light you switch on, is connected to this hidden network of global arteries. Navigating this system are the traders, the master puppeteers of global supply chains. Companies like Trafigura operate in this high-stakes world. They don't own the mines that unearth copper, nor the vast oil fields that pump crude from the ground. Instead, they thrive in the space between, the complex, often volatile gap between producer and consumer. They are the indispensable intermediaries, orchestrating the journey of these materials. They charter the supertankers, finance the multi-billion-dollar shipments, and hedge against price swings and political instability. They are the architects of flow, solving immense logistical puzzles in a world of constant change, making them both essential and extraordinarily powerful. And among these giants, Trafigura is a titan. Born in 1993 from a controversial split with the legendary trading house Mark Rich plus Co., it has grown into one of the largest private companies on Earth. Being private is key. It allows Trafigura to operate with a level of opacity that is impossible for its publicly listed rivals, shielding its immense profits and high-risk strategies from public view. With annual revenues soaring into the hundreds of billions, its influence is staggering. This empire is built on three core pillars. First, its traditional stronghold, oil and petroleum products, trading millions of barrels of crude and refined fuels every single day. Second, metals and minerals, sourcing everything from copper and zinc for industrial manufacturing to the cobalt and lithium essential for the green energy revolution. And third, its rapidly expanding power and renewables division, a strategic move into trading electricity, natural gas, and carbon credits, positioning itself for a changing world. Trafigura's business methods are a masterclass in operating below the radar. The company has perfected the art of the shadow trade, conducting billions of dollars in business while maintaining a minimal public profile. A single trade can involve multiple jurisdictions, complex financial instruments, and a web of shell companies and special-purpose vehicles. No incident has marred Trafigura's reputation more than the 2006 Côte d'Ivoire toxic waste scandal. This single event has come to define the company in the public consciousness, casting a long and dark shadow over its immense financial success. It serves as a chilling case study where the relentless pursuit of profit margins collided with fundamental human rights, leaving a legacy of sickness and mistrust that endures to this day. It stands as a stark and tragic example of the human cost that can accompany the pursuit of profit in the unregulated corners of the global economy. In 2006, Côte d'Ivoire was a nation struggling to emerge from a civil war. Its government institutions were fragile, and its regulatory oversight weak. This environment created an opportunity for a powerful corporation to externalize its costs, shifting a dangerous burden from a heavily regulated European port to a city with far fewer protections, a practice critics have labeled toxic colonialism. The story began when a cargo ship chartered by Trafigura, the Probo Koala, sought to dispose of slops. This wasn't just any industrial byproduct. It was a highly toxic residue from refining cheap, high-sulfur gasoline. The waste was generated by a process called caustic washing, creating thousands of tons of sludge laced with hazardous chemicals. Before sailing to Africa, the Probo Koala attempted to offload this waste in Amsterdam. Dutch authorities, recognizing its toxicity, quoted a high disposal fee. Trafigura refused to pay, instead finding a local company in Abidjan willing to do the job for a fraction of the cost, less than $20,000. What followed was a public health catastrophe. The local contractor, unequipped for hazardous material handling, dumped over 500 tons of the toxic sludge across Abidjan, in open-air landfills and near populated areas. A foul stench quickly enveloped the city, causing immediate and widespread illness. Residents reported severe headaches, nosebleeds, nausea, and painful skin and lung burns. The Ivorian government reported over 100,000 people sought medical attention, and official figures cited 15 deaths, though many believe the true toll was far higher, with long-term health consequences still unraveling. Trafigura has consistently denied its waste was capable of causing such harm. Yet the company eventually paid nearly $200 million to the Ivorian government and settled a class action lawsuit in the UK, all while never formally admitting liability. This toxic legacy remains a defining chapter in Trafigura's history. Trafigura has built quite a reputation for operating in the gray zones of international commerce, often pushing the boundaries of what is legally and ethically acceptable. Accusations of corruption and bribery have also dogged the company. Trafigura found itself at the center of the oil for food scandal in Iraq, and more recently, a former executive was convicted in Switzerland for bribing officials in Angola. The culture of secrecy at Trafigura is not just a matter of habit. It is a core pillar of its corporate identity and strategy. This is a company built as a fortress, designed to protect its information, its people, and its profits from the outside world. Unlike publicly listed giants like Shell or BP, Trafigura is privately owned by its senior managers and employees. This private status grants it an extraordinary degree of operational freedom and confidentiality. When people think of powerful global corporations, names like Apple, Amazon, or ExxonMobil come to mind. These are companies whose products and brands are part of our daily lives. Trafigura, by contrast, operates in a different dimension of power, one that is less visible, but arguably more fundamental. Consider the scale of its operations. On any given day, Trafigura is orchestrating the movement of hundreds of ships carrying millions of tons of oil, gas, metals, and minerals across the globe. To ignore Trafigura and its peers, giants like Glencore, Vitol, and Cargill, is to misunderstand a fundamental truth about the 21st century global economy. We often focus on the big, publicly known producers like Shell or BP or the consumer-facing brands. But between them exists a parallel world, a shadow economy of commodity traders. These are not abstract financial players. They are the masters of physical supply chains. They own the ships, the pipelines, and the storage tanks. In a single year, the top trading houses can generate revenues that dwarf the GDP of entire countries. Yet, unlike public corporations, they are intensely private, owned by a small cadre of partners and executives. This secrecy isn't an accident, it's their most valuable asset, allowing them to operate with a level of discretion and speed that is unimaginable in the public sphere. They are the hidden architects of our material world, and their blueprints are kept under lock and key. Their business model is deceptively simple: buy low, sell high. But its execution is a masterclass in exploiting information asymmetry, geopolitical instability, and logistical complexity. A decision made in a quiet Geneva boardroom can divert a supertanker of crude oil from Asia to Europe mid-voyage, capitalizing on a sudden price fluctuation. This move, invisible to the public, can directly impact the price you pay at the pump a week later. Their influence has far more profound public consequences. These companies have been accused of propping up authoritarian regimes by buying their oil, exacerbating food shortages by hoarding grain, and engaging in deals that sidestep international sanctions. The infamous Probo Koala incident, where a ship chartered by Trafigura dumped toxic waste in Côte d'Ivoire, affecting over 100,000 people, stands as a stark reminder that the pursuit of profit in these shadows can have devastating human and environmental costs. This raises the ultimate challenge: transparency and accountability. How do you regulate a ghost? These firms are structured as complex webs of entities, often domiciled in jurisdictions like Switzerland or Singapore, which offer maximum corporate secrecy and minimal tax obligations. They employ armies of the world's best lawyers and lobbyists to navigate and often shape the rules in their favor. The revolving door between government and these trading houses is well documented, with former officials taking lucrative positions, bringing their insider knowledge with them. For journalists and civil society, piercing this veil is a monumental task. Financial reports are sparse, ownership is opaque, and legal threats are a constant deterrent. They have perfected the art of being everywhere and nowhere at once. Only by bringing these shadow giants into the light can we begin to have a meaningful conversation about who controls the world's resources. This isn't just about corporate oversight, it's about democratic legitimacy. When a handful of unelected, unaccountable traders can influence the price of bread, the availability of fuel, and the political fate of nations, they are acting with a power that rivals that of governments. They are, in effect, a private, parallel system of global governance, operating entirely on their own terms and on whose terms the global economy truly operates. The hidden hand is powerful, but it is not invincible. The first, most crucial step toward accountability is awareness. Understanding that this hidden layer of power exists is essential. The tireless work of investigative journalists, whistleblowers, and advocacy groups has begun to drag their operations out of the shadows and into public discourse. As we confront the immense challenges of the 21st century, from climate change to geopolitical conflict, we can no longer afford to ignore the entities that control the very building blocks of our civilization. The question is no longer if we should hold them accountable, but how.